please remember this, that when you start investing, it's always an experience game, meaning the more skills you have, the better your results will be. It doesn't mean you'll be perfect or you won't make any mistakes, but it will allow you to make better decisions. And that also goes with experience. The more experience you have, the better judgments you will make on your investments. And when you have both skill and experience, also, it helps taper off emotions. Let's talk about investing in the Philippines. Is it still a good idea to invest in the Philippines? Or if you have not invested yet, is it a good idea to start investing now? So I'll make it pretty simple. It's a good idea to invest, that you have your money working hard for you versus spending it on things that don't matter, spending it on things that would depreciate. Always remember that when you start investing, you are prioritizing your future. When you start investing, you are allowing yourself more days later on to have freedom to do what you want, freedom if you choose not to work and do the things that are more meaningful to you as well. That's what investing can do, and that's what investing would bring. While we're doing this video, there's so many options on where you could actually invest. You could invest in asset classes outside the Philippines, and it's not just limited also to stocks. You could do bonds, you could do crypto, you could do mutual funds. There's also the option of investing in real estate outside the Philippines as well. I want to say this is a precursor to everything, that if you start investing in the Philippines and then you're earning in peso, I think one of your biggest advantages is that you're not subjecting yourself to currency risk. Meaning, if you're earning in peso and then you're investing overseas, you invest in dollars. Let's say your stock went up in value, but the dollar went down. Whatever gains you have, it could also be diminished by the currency that you are investing into. So it's not that it's wrong, it's just that you have to also keep that in mind. And what's interesting about that, if you look at the British pound, it has dropped also over the past decade. Those who invested in UK stocks over that period of time, even if their stocks are up, but the British pound is very, very low up against the peso, it may have diminished also your return. So if you are earning in peso and you're thinking, this is my first investment, then maybe it might be prudent also to invest in the Philippines because it reduces your risk. And what's interesting about that is it helps you build the skills necessary. Please remember this, that when you start investing, it's always an experience game, meaning the more skills you have, the better your results will be. It doesn't mean you'll be perfect or you won't make any mistakes, but it will allow you to make better decisions. And that also goes with experience. The more experience you have, the better judgments you will make on your investments. And when you have both skill and experience, also, it helps taper off emotions. You start investing, it's an emotions game as well. If your emotions of greed and fear are tugging you, also, it may prevent you from earning more. It may cause you also to lose more money than what you've hoped for. Is it a good idea to invest in the Philippines in 2023? Of course, if you know what you're getting into. Of course, if you've covered the basics also, extra cash, you have cash flow, you're not in debt, you've laid out the groundwork for you to be able to invest, it's always a good idea, especially if the market isn't also as bullish. Especially, for example, you're the type of person that wants fixed income. It's actually a good time to be able to invest, because if you're investing in fixed income right now is high, meaning you lock that in for 10 years, you will get passive income for that next 10 years at a very, very high interest rate. The pitfall for equity markets is that it hasn't really moved over the past decade. It may not be as exciting in a way that you may earn this year. When markets move sideways or when it really hasn't done anything, the idea behind that is you start accumulating, you start building a base, but your timeline must be longer. I've said this in other videos that these are all cycles. What's up will go down, and what's down won't stay down also forever. But a lot of people are impatient. Because they're impatient, they somehow tend to make decisions over the short term. They tend to make decisions out of haste. They tend to make decisions out of their emotions, and that's where a lot of people lose money, when they become impatient and they don't see the grand scheme of things on how things will be. So when you see markets are sideways and you are an investor, it's accumulation time, it's building a base time, it's giving yourself a chance to be able to put life-changing money into certain asset that you really have full conviction into, that you really know, that you really understand. And as you start doing that, and as you start putting it in, just deploy the patience to be able to wait for it, that it starts to go up again. Do remember that when you look at the Philippines, there's so many things that have happened here. As things have started to unravel, there's a lot of things that have changed. There were times also in the 80s that things weren't so good. There were times also in the 90s where things weren't so good also, but the market's recovered. I want to say that it's all cyclical. Times like this are very prevalent, that people aren't investing well, that people don't like to come in. That could be a signal already for you on what you're supposed to do, on how you're supposed to deploy your capital. If I was just starting out right now, I'm say a fresh grad, or I've been working for some time and this is the first time that I'm trying to learn how to invest, I'm gonna do so, because under the context that markets won't stay down forever, and under the context that it helps me build the right skills. For example, after a year or after 2 years, you figure out that, hey, this isn't for me. At least you already know. That being said, also, while you're starting, just start small. I always say start with an amount of money that you can tolerate to lose. If that amount that you can tolerate to lose is also big, it would be a waste if you're gonna put it in one go. It would be a waste if you're gonna put it in one try, when you have the ability to be able to start small and use that as an education. Always think about your first investments as an educational practice, that as you start learning more, as you start getting better, you get educated, and as you start getting educated, that's when you start putting in more money. You not only just make better decisions, but you also have the ability to somehow maximize the money that you're putting. Because if you put a large amount of money quickly, but you're not educated, you're not skilled, you don't have the experience, you will learn via experience, and that also means that you could lose money while you're actually learning. And that's what I want to submit to all of you. But it's not wrong, but what's very important is you start small, and you start right now, and you start educating yourself. I've made several videos in this channel, thousands of videos in this channel talking about that, so you can check those out. I also have webinars down below. If you want to learn more about the stock market, about crypto, about technical or fundamental analysis, I have webinars on that, and I've written 5 books that are available in Shopee. You could check out the links in the description below if you want to know more. To put all of this into a close, investing is more of a personal decision. It's something that you have to build the conviction on your own, and not just base it on what you see in the macro. When there are certain sectors that are bad, there will be certain sectors that are good. The pandemic has been a very, very good example. When people called it the darkest of times, tech stocks were doing well. When people called it the darkest of times, stay-at-home stocks did well. Vaccine stocks did well. You also saw in the Philippines, telecom-related stocks also did well. That when you start investing, there will always be opportunities. It's not all gonna be bad at the same time. When the economy is good, not a lot of people would want to invest in defensive stocks. But when there's a lot of uncertainty, people would be going into defensive stocks as well. Or when there's a lot of uncertainty, investors would be going into stocks, your asset classes that have quality as well. There will be a flight to quality, and not a lot of people would be putting it on things that are speculative or not as good as well. Look at 2023 as your way for you to not just build skills, learn, and get better, but for you to be able to position and build a base, so that when the bull market comes in and times get better, you already have built something big, and you're just gonna ride it to its fullest. So I hope you guys got a lot from this. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.